conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Raju Barnawal from Antique Stock Broking. Thank you, and over to you, sir.
Thank you, Suraj. Good afternoon, everyone, and thank you for joining post-result conference call of Central Bank of India. From the management side today, we have with us Sri M.V. Rao, MD and CEO, Sri Vivek Vahi, Executive Director, Sri M.V. Murali Krishna, Executive Director, Sri Mahendra Dohare, Executive Director, and CFO, Sri Mukul Dandige. Now, without any further delay, I hand over the call to the MD, sir, for his opening remarks, post which we will open the floor for the Q&A. Thank you, and over to you, sir.
Yeah, thank you, Raju. And very good afternoon to all of you. And we are very happy to share with you that now we have recorded the highest ever net profit of 2,549 crores. And just I will give the performance highlights. Later my CFO will give you the details. Now as far as the highlights are concerned, our total business have grown by 10.34% to 6.36 lakh crores. Earlier it was 5.77 lakh crores. Total deposits now at 3.85 lakh crores. That is a growth of 7.16% from the previous year. And let me tell you that in our total deposits, our certificate of deposits is 0. And CASA deposits, we have 50.02%. One of the best CASA ratios we are maintaining. And gross advances has grown by 15.60%. Now it stands at 2.51 lakh crores. Credit deposit ratio, now it has improved to 65.59%. In the previous March, it was 60.86. Gross NPA has improved. In the previous year, it was 8.44. Now it is at 4.5. Net NPA, which was 1.77, now it has come down to 1.23. And provision coverage ratio is improved. Now is at 93.58%. And net interest income has grown by 10.34%. Net interest margin now is at 3.40. In the previous year, it was 3.47. Return on assets has improved to 0.76. Return on equity has improved to 2.92% on quarter to quarter. And for FI, it is 9.53. And CRAR is improved to 15.08%. So this is the highlights of our financial results, and details just our CFO, Mr. Mukul Dandige, will explain you. Thank you.
Thank you, sir. So the total interest income has grown by 20.28% to 30,722 crores. The total interest expenses have grown to 17,826 crores at 28.66% because of the lag effect of the rate transmission. The net interest income is at 12,896 crores, a growth of 10.34%. And the total income growth has been at 19.60%, and the total income stood at 35,434 crores. The total expenditure has increased to 28,071 crores, a growth of 23.43%. The operating profit showed an improvement of 6.96%, and the operating profit was at 7,363 crores. If we take away the provisions of 4,814%, which is a dip of 9.20% over the last year, the net profit has surged by 61.13% to 2,549 crores, which is the highest in the history of the bank. The fee-based income and total other non-interest income has improved on a YOY basis. If we see, it has improved to 4,711 crores from 4,084 crores, an improvement of 15.35%. And the interest expenses have increased by 28.66% overall. interest paid on deposits, there is an increase of 26.29% to 16,908 crores. The operating expenses have increased by 15.28% to 10,245 crores, out of which the staff cost increase is 12.63% because of the wage revision and other terminal dues payable. And the other operating expenses have increased to 3,933 crores, an increase of 19.80%. The provisions part, the provision on NPA reduced to 3,391 crores, a reduction of close to 4%. The income tax liability has gone up from 1,063 crores to 1,504 crores, an improvement of 41.49%. Thus, the total provisions have dipped by 9.20% to 4,814 crores compared to 5,302 crores in the last financial year. The gross and net NPA, as sir has said, has improved. Gross NPA has improved from 8.44% to 4.50%, and net NPA has improved from 1.77% to 1.23% in the current financial year. The net NPA, if we see sector-wise, we are now comparable with almost all the other public sector banks. We are in line. The provision coverage ratio has improved to 93.58%, and the slippage ratio on a quarter-on-quarter basis has come down to 0.57 in March 24 quarter. The credit cost also has come down to 0.85% in the March 24 quarter. The total restructured book and special mention accounts, we have given details on our slides 21 and 22. The total restructured book stands at 6,455 crores, and the total special mention accounts, including all up to 5 crores and above 5 crores accounts, stand at 15,919 crores, 6.32% of our total advance book. The capital adequacy ratio has improved from 14.12% in March 23 to 15.08%, and the leverage ratio has also improved from 4.73 to 5.13% during this financial year. Business details, already MD sir has informed you that business has, how the business growth has happened. I would like to touch upon the treasury performance also. The overall income, the aggregate investment has increased from 1,42,653 crores to 1,49,538 crores. The interest on investment has improved from 8,715 crores to 9,510 crores, and the yield has improved from 6.26 to 6.57. The yield, including the trading profit, has improved to 6.91, an improvement of 50 bps. And despite all this, we have been able to contain the M duration and the PV01 of our portfolio. These all were the major highlights of the performance for this current financial year. Now,
adding to this, just let me highlight you some of the initiatives what we have taken during the year gone by. Number one is we have established our integrated customer care. That is the one-stop solution for all the grievance handling and also for outbound marketing. For both the things we have established, it is a state-of-art technology we have employed there. With the all recent technology, what you call that, Gen AI, those tools were deployed. So for the past 1.5 months, it is working fine and it is stabilized. And going forward, that integrated customer care service will be utilized fully. Next initiative what we have rolled out is the collection management system with the integration with our war room for the recovery. That collection management system works with our outsourced vendors where the feet on street people are also employed. That is the second initiative. Third is our Cent Neo, what we explained in our earlier briefings, that our technology platform with a lot of investment that we started Now products are being rolled out within 15 days. Some 4 products we are rolling out through our Cent Neo, that is the transformation of our digital platforms. And then omni-channel, that is on the mobile, that is also is slated for rolling out in the month of July. So these are all the new initiatives what we have taken. And earlier initiative of co-lending, that part we will continue to focus with much more trust this year, because this time we have reached a total outstanding figure of 11,000 crores. We have tie-ups with 27 NBFCs, and in this financial year we have a target of having tie-up with the 50 NBFCs to reach the portfolio of 25,000 crores. These are all the new initiative parts. Thank you, and it is open for our analysts or whosoever logged in for any questions. Yeah, thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, if you wish to ask a question, please press star and 1. Our first question is from the line of Ashok Ajmera from Ajcon Global. Please go ahead.
Sir, my compliments to you, sir, for yet another quarter and the whole year of the very good results of the bank. Sir,
thank you.
Having said that, now, sir, going forward, now since the central bank has now again have almost reached to or reaching to its past glories, how do we see the coming year now going forward? Are we still going to be little conservative in our targets and estimates, or we want to open up and a bank of our size where a lot of scope is there to grow rapidly as compared to some of the other large peer banks? So I want to hear, sir, about your plans or your ideas for the next whole year for the bank, sir. Where are we heading, sir?
Okay. Yeah. Ajmera sir, thank you. Let me give you the big picture so that you can work out the details. We would like to grow the business at the rate of 12 to 14%. Okay. In that, CD ratio, we want to improve it from 65 to 70. That will be 70 to 72 is our band for the next March 25. So once we are ramping up our CD ratio, definitely our credit book is also going to grow. And at the same time, now there is a slight shift. What we would like to make in our credit book balancing is, we were sticking to the RAM and the corporate at 65 and 35 with plus or minus 5%. Now slightly we are revising that our RAM will be around 63 and corporate will be at 37 with plus or minus 1%. This is how we are working out this time. That is, the slight shift will be there from the RAM to corporate. 2 percentage basis points will be shifted to the corporate side from the retail.
Sir, now where do we see the ROA which has come up to now 0.76 this quarter, and with this kind of mix increasing, RAM 63 and corporate 37?
Yeah, our target for ROA is 1 for the March 25.
Oh, that's great, sir. That will be very good.
Yeah.
So now coming to, sir, this you also said that the NBFC and participating with them and increasing but the way the RBI is going a little tough on the existing financial sector, especially on the NBFCs and how do you see going forward? Don't you see that there will be some pressure even on the NBFCs also, and on the bank as a whole also for this entire RAM category, and especially in the areas of personal loans and retail loans? Don't you see that there will be some pressure on that, or the margins might also come little bit down because of that?
Sir, number one is what RBI is doing. There is no comment from our side. He is the regulator. Number two is, as far as our approach in the co-lending with the NBFCs, it is as a business model we have adopted this. And wherever weak links that were there in our traditional structure is being complemented by the strength what NBFCs were having. So with that concept we have moved, and it is working well. And going ahead also, we don't foresee any type of issues in our co-lending model, because there is 80-20 is there, and our shortcomings or some gaps in the collection and monitoring mechanism is taken care by the NBFCs. These two things are working well for us, and we don't foresee any problem for the coming period.
Sir, my last question in this round is on our recovery front, covering all the areas of the recovery from NCLT, NARCL, selling to the ARCs, and also the recovery from the return of account. So how optimistic you are, and where do we stand as far as the now 24-25 is concerned, sir?
This current financial year, we are able to have
just our GM recovery will be sharing with you the details.
Yes, sir. Please, sir.
Yeah.
Mr. Dohare?
No, our GM.
Sorry. Oh, I'm sorry. Yeah, not executive as a GM. Yeah, please.
In the current financial year, sir, we are aiming to have cash recovery of 4,000 crores. Approximately 10 to 15 accounts are due for settlement in NCLT. The amount is 2,500 crores, out of which 1,000 crores will be cash recovery. Last year, we assigned 5 accounts to NARCL, and this year also we have received the request, and we are assigning 6 accounts to NARCL. And amount is 500 crores.
Okay.
And we are taking
500 crore of assets.
Yeah.
What is the average realization we expect?
Average realization from NARCL is 30 to 40%.
Okay, of which 85 is SRs and 15% is cash payment.
Yeah, very correct.
Okay, sir. So overall recovery target?
We will be reaching our gross NPA target, which we have annually said 3.67%. Definitely we will be achieving it.
Okay.
And besides this, Ajmera sir, we have a sizable pool of return of accounts. So this year also, we have been able to recover close to 1,433 crores out of those return of accounts. We intend to further step up recovery efforts in these return of accounts, and maybe in the range of 1,500 to 1,800 crores if we are able to recover in the next financial year. That is going to give us some boost in our operating income, because that will go directly into P&L.
Straight to bottom line.
Yes, sir.
Sir, any color on that recovery on that aviation account? Are we selling the collaterals and realizing something out of the 1,700-1,800 crore which we are? No, of course, that is not a return of account, but what are the recovery prospects?
In our books, we have provided 100% for that, number one.
Okay.
And number two is now we are taking all the actions which are required. And as far as the land parcel which is there, already we have published the public notice under Surface C, and we are proceeding on that.
Oh, that's great. Thank you very much, sir, for this round. Thank you very much. If time permits, I'll come back again. Thank you. And all the best. Okay.
Thank you. The next question is from the line of Piran Engineer from CLSA. Please go ahead.
Yeah, hello sir. Congrats on the good quarter. I just wanted to understand what is our NIM expectation for next year and what will be our driver for ROA improvement from 0.63 to 1%.
See, the NIM, we were at 3.40% as far as this financial year is concerned. For March quarter, we were at 3.58. So we expect that we will be above 3% as far as the NIM is concerned. Secondly, you are saying ROA 1% drivers, right? So if you see my net profit surged by almost 61% from 1,582 crores to 2,549 crores this year. So we expect that this would continue further. Because you know the ROA will have assets thing also. So if we are able to recover more from the return of assets and other fee-based income, that can support our operating profit. So in that case, the ROA will be definitely where we intend to reach in the range of 1%.
Okay, so sir, what I understand, our NIM might be lower next year, but our credit cost will also be lower.
Right.
Yeah, NIM will not come down drastically. What we would like to tell is in the earlier calls also we used to tell that we will be above 3. That is sacrosanct for us. And whatever the upside that comes, we will always be striving hard on that.
Okay, got it. That's all from mine. Thank you, sir.
Thank you. The next question is from the line of Manish Suvarna from Money Controls. Please go ahead.
Hello, can you hear me?
Yes.
Yeah, please.
Continue.
Yeah, hi sir. Firstly, congratulations on your result. I just wanted to understand how much slippages you got in this quarter, and this is from which segment?
Yes, sir.
See, the total slippages during this current quarter were at
75 crores.
Yeah, 1,175 crores, right? And the slippages happened.
This slippage happened basically in the sector of MSME. And
the slippages majorly were in MSME, around 292 crores, agriculture 200 crores.
MSME how much? 290 crores.
292 crores.
92, okay.
Yeah. Retail around 134 crores, and corporate there was one account.
okay.
Yeah.
170 crores.
Around 170 crores from corporate. There is no one particular sector which is a cause of concern.
Which is that? Which one is that one account of the corporate?
Specific, we will not. No, small accounts, not large accounts in a corporate, in the range of 50 to 100 like that.
Yeah.
Not any big account has been slipped during this quarter.
Okay, so basically the majority of the slippages that came from MSME, retail, and the corporate segment, and rest is from the rest of the.
Agri also is around 200 crores.
Pardon, I didn't get it.
Hello.
Hello.
Yeah.
Sir, I couldn't be able to hear you. Can you come once again?
No, the sectors basically agriculture around 200 crores,
Agriculture,
MSME around 292 crores, retail 135 crores, and around 170 crores for the corporate and others.
Okay. Thank you, sir. And my second question is on the cost of funds. It has gone up by 76 basis points on a yearly basis. That's what I can see in your investor presentation. So what are the projections for the FY25 considering the geopolitical tensions?
yeah. Now you see the repo rates started increasing from the month of May 22. So our yield on advances started increasing immediately because the repo-based rates constitute almost 51-52% of our total advances. However, the deposit rates, we increased the deposit rates from December 22 months. So in March 23, if we see, there was only a 3-month impact. Now the full impact has already happened. So we do not expect any substantial increase in the cost of deposit and cost of funds going forward. If you see, our yield on advances has also started to improve further, and it stands at 8.91% now.
Got it. So it will remain at the same level. That what can I expect?
I mean, there will not be any disproportionate increase in the cost of deposits vis-a-vis the yield on advances.
Okay. Thank you, sir. Thanks a lot, and once again, congratulations for the result.
Thank you.
Thank you. A reminder to all the participants, if you wish to ask questions, please press star and 1 on your touchtone phone now. Our next question is from the line of Franklin Moaris from Equentis Wealth Advisory. Please go ahead.
Yeah, sir. Thanks for taking my question. So you mentioned ROA target of 1%, but in the presentation I see your ROA target is 0.75 to 0.85. So where exactly is the discrepancy?
That one has to be revised.
Point 0.85 our expectation is 1, and we hope to reach 1.
See, our target is to reach 1, and I think in the last slide which is uploaded, that range they have given, I think that will get corrected now.
Okay. So this needs to be revised.
Yeah.
Okay. And so secondly, presently we are at 0.6 and we are targeting to reach 1. Our NIM is already higher at 3.4 vis-a-vis our guidance, where we are expecting NIM to be above 3. So where is the improvement going to come from?
See, even though the financial year-wise our ROA might be 0.6, but for the current quarter it is 0.76. So naturally you must have seen my profitability. It has already had a consistency. So going by the past year's projections, the same consistency is expected in this financial year also. So we'll start with an ROA of 0.76 from this quarter. So going forward by March 25, we'll be able to touch 1. And NIM also, if you see, we are saying we'll be about 3, but as the MD sir has said, we intend that, we don't expect any sizable reduction in the NIM in the current financial year also.
Okay. And sir, lastly, like now presently we have this government stake at 93%, but we need to bring it down to 75%. There are other public sector banks who have also done or being able to reduce it. So what is our glide path and timeline in terms of bringing down the stake?
Sir, for this already we have engaged with the government. We are seeking for the OFS part. Once the government clears that, then this OFS part will come into play. That may be a single reduction or maybe in tranches. That will give us the room further. Once we unlock our value, then we will be going for our QIP or any other sort of raising the equity.
But any bifurcation in terms of your plans in terms of will it largely be OFS or will this largely be a QIP? How exactly are we going to reach this? And how much time are we likely to take to reach to 75%? Any indication will also help.
No, actually this is the call to be taken by the government, but our request is always there. Whether if they are going to offload it through OFS, what will be the percentage that we will be coming to know in the next 2 months. Then we will plan accordingly, then how much percentage that will be offloaded through OFS and what is that we have to take up through the QIP, so that that combination will work out only after 2 months.
Okay. Fair enough. So thanks a lot.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Anil Pandey from the front page. Please go ahead.
Congratulations, Mr. Rao, for 473 BPS growth in LDR, which we now call credit deposit ratio.
Thank you.
What I observed that in numerator, we find 15.6% growth, and in denominator, that is deposits, we find 7.5%.